The on-balance volume, OBV, is a cumulative volume indicator used in technical analysis to measure buying and selling pressure. It assumes that volume precedes price. When volume flows into a stock, price will eventually follow. OBV was introduced by Joe Granville and remains widely used in equities, futures, and crypto. How it works. OBV adds or subtracts the entire day's or bar's volume, depending on whether price closes higher or lower than the previous close. If the close is higher, volume is added. If lower, volume is subtracted. If unchanged, OBV stays the same. This creates a running total that reflects net accumulation or distribution. The absolute value is not important. The slope and relative direction are what matter. Interpretation. When OBV trends upward, it indicates accumulation, buyers are more aggressive. When OBV trends downward, it signals distribution, sellers dominate. The indicator is most useful when compared directly with price. If price rises and OBV rises, the trend is considered confirmed. If price rises while OBV falls, it suggests weakening momentum and possible reversal. The inverse applies during downtrends. Key signals. Divergence is the primary use. Bullish divergence occurs when price makes lower lows, but OBV makes higher lows, implying hidden buying. Bearish divergence occurs when price makes higher highs, but OBV makes lower highs, suggesting distribution. Breakouts are another use. When OBV breaks a resistance level before price does, it often precedes a price breakout. Trendline analysis on OBV itself can be effective. Best use cases. OBV performs well on liquid instruments with consistent volume. Is particularly useful for day trading high dollar volume stocks, which aligns with your prior focus on strong liquidity filters. It works on all time frames, but 5-minute and 15-minute charts often produce cleaner signals for intraday trading, while daily charts are better for swing confirmation. Strengths. It identifies accumulation early, confirms breakouts, and is simple to interpret. It does not lag as much as many moving average-based indicators because it uses raw volume flow. Weaknesses. Large one-day volume spikes can distort the cumulative line. OBV also does not account for intraday price movement. Only the close relative to the previous close matters, which can oversimplify complex price action. Common strategy integration. Combine OBV with trend context. For example, during a pullback to VWAP or moving average, look for OBV holding higher lows. That suggests buyers are still active despite the pullback. Another approach is using OBV breakout confirmation for opening range breakout setups. If price breaks the range and OBV simultaneously makes a new high, probability improves. The most effective ways to trade with on-balance volume, OBV, rely on confirmation, divergence, and breakout behavior. The indicator works best when paired with structures such as trend, levels, or volatility expansion. 1. OBV breakout confirmation strategy. This is one of the highest probability uses. Mark resistance or support on price. At the same time, draw a similar level on OBV. When OBV breaks its level first, it signals accumulation before price. Entry is taken when price then breaks the level. The logic is that volume leads price. This works especially well for opening range breakouts and consolidation breakouts. Exit can be based on failed follow-through or OBV rolling over. 2. OBV divergence reversal strategy. Divergence highlights hidden buying or selling. If price makes lower lows but OBV forms higher lows, buyers are accumulating, bullish divergence. If price makes higher highs but OBV makes lower highs, sellers are distributing, bearish divergence. Entries are taken after price confirms with a trendline break or reclaim of support resistance. This works best after extended moves or near key levels. 3. Trend continuation with pullbacks. Use OBV to confirm that pullbacks are healthy. In an uptrend, price pulls back but OBV holds steady or makes higher lows. That suggests selling pressure is weak. Entry occurs when price resumes upward momentum. In downtrends, the opposite applies. This strategy works well with VWAP, moving averages, or trend lines. 4. OBV plus high dollar volume momentum strategy. Since you previously focused on high liquidity setups, this is particularly relevant. Scan for stocks with strong dollar volume. When price consolidates and OBV trends upward during consolidation, it signals quiet accumulation. Entry is taken on the first expansion candle. This often precedes momentum continuation. 5. OBV trendline break strategy. Draw trend lines directly on the OBV line. When OBV breaks its trend line before price, it can signal an early directional shift. This is useful for catching reversals earlier than price-only methods. Most reliable combinations OB plus VWAP for intraday continuation, OBV plus support resistance for breakout confirmation, OBV plus moving averages for pullback entries, OBV plus volume spikes for momentum trades. Best time frames. For day trading, 1-minute entries with 5-minute confirmation provide balance. For swing trading, daily OBV is more stable. Lower time frames can be noisy unless liquidity is high. The two strongest in practice are breakout confirmation and divergence reversal. They exploit OBV's core advantage, identifying accumulation before price reacts. Several indicators complement on-balance volume, OBV, because they add context that OB alone does not provide, such as trend direction, volatility, or overbought oversold conditions. VWAP, best for intraday confirmation. Volume-weighted average price FAT pairs well with OBV for day trading. VWAP defines institutional bias, while OBV confirms whether volume supports that bias. If price is above VO and OBV trends upward, buyers are in control. Pullbacks to VWAP with OBV holding steady often produce continuation entries. Moving averages, trend structure. Short-term averages like exponential moving average EMA, 9 EMA, 20 EMA provide directional context. OBV confirms whether pullbacks are weak or strong. For example, price pulling back to the 20 EMA while OB remains flat suggests limited selling pressure. RSI, Momentum Exhaustion plus Accumulation Relative Strength Index. RSI helps identify overbought, oversold conditions. If RSI is oversold but OBV is rising, that signals accumulation before a bounce. If RSI is overbought while OBV declines, distribution may be forming. MACD, Trend Momentum Shifts, Moving Average Convergence Divergence. MACD identifies momentum changes. When MACD crosses bullish and OBV is already trending up, probability improves. OBV often leads MACD signals. Support and resistance. Breakout validation OBV is most powerful when confirming structural levels. When price approaches resistance and OBV breaks to new highs first, breakout reliability increases. This is one of the most consistent combinations. Volume profile, institutional accumulation zones. Volume profile shows where most trading occurred. If price sits at high volume nodes and OBV rises, it indicates accumulation at key levels. Bollinger Bands. Volatility expansion. Bollinger Bands identify compression. When bands tighten and OBV trends upward, a breakout with volume support is more likely. Best combinations ranked for day trading: 1. OBV plus VWAP, strongest intraday. 2. OBV plus support resistance. 3. OBV plus 920 EMA pullbacks. 4. OBV plus RSI divergence. 5. OBV plus Bollinger Band squeeze. OBV works best when paired with one trend indicator and one structure indicator. For example, VWAP, trend, plus resistance level, structure, volume confirmation. The effectiveness of on-balance volume, OBV, depends heavily on liquidity and trading style. OBV relies on cumulative volume, so cleaner signals appear on time frames where volume is meaningful and not fragmented. Best overall for day trading, 5-minute time frame. The 5-minute chart balances signal quality and responsiveness. Volume per candle is substantial enough to reduce noise while still providing timely entries. OBV trend direction on the 5-minute often acts as a bias filter. Many traders use 5-minute OBV for direction and drop to lower time frames for entries. Best for precise entries, 1-minute time frame. The 1-minute chart reacts quickly and is useful for scalping. However, OBV can be noisy here unless trading high-dollar volume stocks. The optimal approach is aligning 1-minute OBV entries with a 5-minute OBV trend. When both slope in the same direction, probability improves. Best for confirmation, 15-minute time frame. The 15-minute smooths out intraday fluctuations. OBV divergences on this time frame tend to be more reliable. It works well for holding trades longer within the session. Best for swing trading, daily time frame. Daily OBV is significantly more stable. It is effective for identifying accumulation over several days or weeks. Breakouts accompanied by rising daily OBV often lead to sustained moves. Less effective time frames. Tick charts in extremely low time frames, like seconds, create erratic OBV due to inconsistent volume. Very high time frames, weekly, monthly, are slower and less useful for active trading decisions. Optimal multi-time frame setup. Use 15-minute OBV for overall bias, 5-minute OBV for trend confirmation, and 1-minute OBV for entry timing. This layered approach reduces false signals. Key principle: OBV performs best when volume is concentrated. This aligns with your focus on high dollar volume stocks. The higher the liquidity, the more reliable the OBV slope across all time frames. A strong strategy combining on-balance volume, OBV, and volume-weighted average price, VWAP, is essentially a volume confirmation of institutional bias setup. It works best in liquid stocks, high dollar volume, during active market hours. The core idea is simple. VWAP defines directional bias where institutions are anchored, while OBV confirms whether real volume is supporting that bias. You only take trades when both agree. 1V Trend Bias Filter, Foundation. First, define the market state. Price above VWAP, bullish intraday bias. Price below VWAP, bearish intraday bias. VWAP sloping upward, stronger bullish environment. VWAP sloping downward, stronger bearish environment. You do not trade against this unless you are explicitly fading extremes. Advanced 2. OBV Confirmation Rule, the key filter. Now layer OBV. OBV making higher highs or higher lows confirms accumulation. OBV flat during pullback indicates controlled selling, healthy retrace. OBV falling while price rises, weak move, avoid longs. The most important condition, you only take trades when OBV direction aligns with VWAP bias. Primary strategy, VWAP pullback continuation. This is the highest probability setup. Bullish version, 1. Price trades above V. 2. Pulls back toward VWAP, not breaking it strongly. 3. OBV holds steady or forms higher lows during pullback. 4. Entry on reclaim of short-term structure, e.g. prior candle high or micro trendline break. Why it works. Institutions defend VWAP and OBV shows whether sellers actually have control. Usually they don't in strong trends. Bearish version, price below VWAP, rally into VWAP. OBV fails to make new highs, short on rejection back down. 4. Breakout confirmation variant works well during opening range or consolidation. Setup. 1. Price consolidates near VWAP. 2. OBV starts trending upward before price breaks. 3. Price breaks resistance while OBV is already expanding. Entry. Break of range high-low with OBV confirmation. Key insight. OBV often moves first because volume accumulation precedes price expansion. High failure signal, high-quality reversal setup. This is the trap detection version. Price pushes above VWAP. OBV does not confirm, flat or declining. Price quickly loses VWAP. Short entry on VWAP rejection. Opposite applies for upside reversals. 6. Exit logic, simple and effective. Exit when OBV flattens after strong move, loss of volume support, or when price closes back across VWAP against your position, or when OBV diverges against your trade direction. Practical edge summary. This combination works because VWAP equals institutional reference price. OBV, real-time accumulation distribution pressure. Together, are institutions actually participating at this level?